All right, so Mark, this morning, ahead of this Fed decision, I know you're watching the VIX. We're going to show the VIX here in a second. The VIX actually pretty much at its lowest level so far in 2023, and you're saying that low level of volatility expectations is bringing back what you call the GERF trade. You're going to have to explain the acronym and what you mean.
Well, GERF is greed eventually replaces fear, and it's a tale as old as time in the markets. Investors in this era have a lot of information at their fingertips. It's not like 20, 30, 40 years ago when you had to dig through massive amounts of newspaper reports to understand what was underneath the surface. Now you just turn on CNBC and you hear people say stocks turn near the end of a rate hike cycle. So everybody's thinking we're near the end of a rate hike cycle. They're flooding into tech stocks. They're flooding into interest rate sensitive stocks that do well when rates lower. And you see what happened to the NASDAQ this year. We feel that investors are front running. The fear that we had last year has been replaced by greed. And we think tech stocks and NASDAQ trades, good for the long term, are a little overvalued right here.
Yeah, NASDAQ up almost 17% year to date. So as we mentioned, we're just one day away from that Fed decision. Looking at the latest numbers, 92% chance of a quarter hike, bringing us to the rates to this highest level since August of 2007. How are you positioning ahead of this possible decision? And give us some granularity. What sectors are you overweight? What sectors are you underweight?
Well, the Fed and interest rates have been the headline driver for the market, and we all know that, along with inflation. But underneath the surface, it's earnings, and earnings ultimately drive long-term stock prices. I think what we've seen with the regional banks and some of your headlines this morning about regional banks and the banking sector will underscore that it's going to be difficult for traditional banks to do well in this market. That means to us as asset allocators and people who look at where asset flows go, that non-bank financials are going to be the beneficiary. Look, mutual fund managers, ETFs, have to have exposure to financials. And if you're going to avoid banks, where do you go? We think they go to insurance companies, non-lend people who aren't lending to the consumer, who are going to be sensitive to a recessionary slowdown. So that's why we like the IA case and the insurance sector over the banking sector right now.
All right, we got to let you go, Mark, but one last question. Debt ceiling talks, big deal, not a big deal for the markets?
Short term, a big deal. It always is. Gets a lot of headlines. We'll hear a lot of trash talking out of Washington, D.C. But in the end, they'll come to a deal, and the markets will look beyond it like it always does.
All right, Mark Avallone of Potomac Wealth Advisors. Great to see you as always. Thanks for being on.